Ja, varmt välkomna till Småbolagsdagen. Jag heter Bengt Söderberg och kommer vara moderator under den här sessionen. Och jag kommer att leda frågestunden efteråt då ni som sitter här i lokalen har möjlighet att ställa frågor till föredragshållaren. Och med de orden, jag ska också tillägga att det här kommer att ske på engelska presentationen. Och vid frågestunden så kan ni om ni vill ställa frågorna på svenska. Så kan jag översätta eller kan jag ställa dem på engelska direkt. Och med de orden vill jag välkomna Paul Marsden från Nordic Iron Ore. Very welcome.
Thank you. Thank you for the introduction. Good afternoon, ladies and gentlemen. Well, you've all been here listening to plenty of presentations, and I guess there's one thing in common. There are no guarantees in life. There are no guarantees. But this afternoon I hope to present to you a natural resources project that we believe is a low-risk execution project and of high quality. So first, Nordic Iron Ore, we have to provide a disclaimer. This is something that probably should be read, but I suggest it's when you're trying to get to sleep, and you can use that as an aid. So Nordic Iron Ore. Nordic Iron Ore is a Swedish mine development company. We're developing some old mines in the Ludvika region. And the introduction to the company is backed by more than 10,000 investors. We have a preferential rights issue of 36.5 million SEK coming up this month, middle 2 weeks of this month, starting this week. We're planning to list on the Nasdaq First North Stock Exchange probably in the last 2 weeks of August. And to date, our shareholders have invested 209 million SEK. So the company is looking to resume production in the Ludvika region, and the two mines that are permitted are Bolaget and Hawksbury, and they make up the Ludvika mines currently. And there is a plan to develop what looks like a large resource between the two of them called Westman, and this holds potential which we'll describe a little bit later. Our initial focus and the current focus is purely on getting Bolaget back into production. That's the focus of our studies and the focus of our attention. So, Bolaget, we have all our necessary permits. This is an exceptional circumstance and one that really is a standout for us compared to many other mine development projects. We haven't quite completed our feasibility study, but yet we have all of our permits in place, including environmental permit and even buildings permits. Westman, we just briefly mentioned here. This shows a magnetic anomaly map. The brown material indicates mineralization, and we've drilled the southern part of that to confirm that the mineralization is indeed iron ore. And we have resources that we believe are going to be in the hundreds of millions of tons when we get round to exploring a little bit further. So here we're doing mining development. We have an experienced management team, Hans Torshag and Marcus Carlson. I've been involved in numerous mine developments, including working with LKAB, Boliden, and other noted companies. Lennart is our CFO and Deputy MD. He's well experienced in the world of finance, and as myself, worked for 28 years with British Steel Consultants, or whatever we were called, and more recently Northland Resources. There we go. So the investment case. One of the key points for this project is the high grade that we can make, the high grade iron ore that we can make from our material. And we're selling into a market where there is increased demand for these high grade materials. We're looking at producing an average product of 69% iron. Much of the talk about iron is in the marketplace is only the 62 index iron. Currently, high premiums are being paid for such high quality products. We see this as a lasting situation for a number of reasons, which we can go into. And in our case, all of our permits are granted for the operation. This is a very important situation. Because it's an old mining region and we have the old mine infrastructure there, we have low capital requirements for restarting these operations. It also reduces the time required. So the existing infrastructure is both underground on the surface. We have the services there, the water, roads, rail. And most importantly, for a bulk mineral project, we have the logistics solution already in place. We have a national rail network which can transport the ore directly from the mine to the port of export, which is Oxelösund. And they can do this in a very cost-effective manner. And this project, because there was mining there before and we know what it mines like and what we can do with it, there's a relatively low execution risk and a reduced development time because of the existing underground and overground infrastructures. So here's a map which shows, unfortunately I don't have a pointer. Here we are. So this area here is Blötberget, and that is all fully permitted and ready to go. It's subject to financing. Hawkesbury up here is also fully permitted. And we recently got our mining concession for this southern part of Vestman, where we've done some exploration work. The area in brighter green here is where our exploration permits lie, and this is where we've got a current application for extending that area for investigation in the future. This is a schematic of the 3 phases that we plan to execute. Here's our focus of our attention now. Here's Blötberget, phase 1. And here you can see, sorry. Here we can see that anyway, there's existing infrastructure there. The shaft is existing, and we plan to utilize that and some of the other drifts and other infrastructure there. And then in the future, we plan to move into Vestman and into South Hawkesbury. So we have a situation with a great market opportunity now. We have significant demand in China and Asia, still driving the market. We have a 2-tier market now. We mentioned the bulk market for 62% iron is the main indices that everybody talks about all the time. But recently we have a split off with a second 65% iron, which deals with the much higher qualities of ores available. So this is now gaining strength, is the 65% iron and higher. So this deals with the high quality and the premium pricing. And the pricing differential between the 62 index and the 65 index has been increasing in recent times. So the standard quality is in oversupply, and this is where the price depression has been coming. But there is a deficit or undersupply for the higher quality plus 65% iron materials. So the market opportunity at the moment lies with China and other areas where they're looking to either improve their emissions, their environmental impacts by putting in higher quality materials, and this is creating a market opportunity. The premiums have gone up, as we mentioned, and the premiums for Nordic iron ores material, which averages 69%, has been as high as $50 a ton, a differential between the basic 62 and our product at 69. That's a very healthy margin indeed. And this corresponds to approximately an 80% increase above the spot price. So this premiums, which have increased by approximately 500%, and I can demonstrate this in a graph in a second, during the last 18 to 24 months. So here we have, there we are. So here we are just over 2.5 years ago, January 2016. You can see the premiums between these lines. These are the different qualities of iron ore. There's very little difference. But as we go through these last couple of years, you can see the differential has widened between the 62 and the 65. And currently, with our material at 69, we'd be right up here, right up at the top of the curve or even above it. So that's the effects of the premium pricing, which, as I say, has been driven largely by China. So the market drivers are, as I mentioned, environmental concerns in China and elsewhere. So they have to improve the quality of the feed. Production efficiency, another area where they're looking to produce more out of smaller units or less units. We have increased demand, continuing, and we have a shortage of supply of these premium ores. There's very little in the way of projects that are in the pipeline to supply these high quality ores. So, important for us, we have this existing infrastructure. We have underground infrastructure, we have a brownfield site. In other words, it's a site that had mining there previously and we can capitalize on that. We have underground assets which we can capitalize on and reduce the development time. So the logistics solution is already in place. We have direct access to the national rail network. We have plenty of capacity on the line. We have existing letters of intent with rail cargo as the logistics solution supplier, moving the ore from the mine to the port. And we have a letter of intent with the port of Oxelösund to handle and handle our material and load onto a ship. These LOIs should be ready to turn into agreements once financing allows. So here we have a schematic diagram. Here's the existing rail line, national rail network, and here's a siding and a terminal loop that we will put in eventually. This is phase 1, and the pink is later phases when the mine expands. So low execution risk and reduced development time. Previous operations have demonstrated the mine works. It's fine. It can produce good quality material, and they sold it. We've just applied more modern technology and a larger scale of mining. Many risks are removed as the logistics are in place. This is a huge risk for many projects. They have to often spend a lot of capital getting their logistics solution in place. We don't do that. It's an OPEX for us. All our permits in place. It's great. Feasibility study. This is used to gather the data and de-risk the project, and we've developed it so that we now have a new method of mining that wasn't used there before, which is a lot safer and is very cost efficient. We get a much higher quality product going into our processing plant, and consequently we can improve the output. So this infrastructure, it allows us to lower our capital requirements, and it speeds up the development of the mine. We estimate that if this was a brand new mine site, we would probably take about 3 years in development. We expect to execute this in 2. So the financial summary. We expect on average for this phase 1 to produce around 1.4 million tons a year. The mine life, as we have evaluated it at the moment for the feasibility study, is about 12 to 13 years, and that will provide us with close to 17 million tons a year of product. Our cash cost estimates, which are to be verified, we estimate are around $50 per ton. But assuming the price received is a fairly conservative $80 a ton, we should get a net cash contribution of $30 a ton, which over the life of the mine can amount to over $500 million. So here we have our current plan going forward. If I can find that again, here we go. So here we've just recently appointed Golder Group, international consultants, to complete the feasibility study. So to do the final designs and verify the costs. We have a preferential rights issue planned this month, starting I think on Wednesday. And we're looking to list on the Nasdaq exchange with the first day of trading during August. We expect to conclude the feasibility study by April, but we will know the results of the feasibility study here, and assuming they're positive, we will start to hold discussions on the financing side of matters to do the final raise of the capital. And here we have a subscription period as well. And then we're looking obviously for the financing and then to construct the mine. The feasibility study will confirm and determine the total capex. We currently estimate it's around $200 million to build the mine. There are lots of financing options, including leasing, debt and equity. And the use of contractors may be able to reduce some investment requirements if necessary. So, in conclusion, why invest in Nordic iron ore? Well, there's huge demand out there. There is massive demand for iron ore in general still. There's consumption of around 2 billion tons a year. The high quality demand is increasing in preference to some of the lower qualities, and we don't see this changing for the foreseeable future. Here we are amongst the world's best. We can produce up as high over 71% iron in our product if we wish. We have to just optimize as required by the market or by the customer. Here we have underground infrastructure that we can use a lot of this to help reduce our costs, development costs. We have a railway. It's operating. It's there. We have capacity, plenty of capacity on there to satisfy our requirements. And the government has been refurbishing this line to make improvements. We have the port. It handles iron ore. It used to export iron ore. It still can. It currently imports iron ore for SSAB, but it handles around 6-7 million tons a year of dry bulk cargo. It's ready to go. And finally, we have the permits. This is key in modern development for mines. This is really an advantage that we have over many projects. Thank you very much for your attention.
So, thank you very much for a very interesting presentation. And we will go over to a question and answer session now. And I have a question. How are the economics of this project if you compare it with the other peers in the world? How do they stand out?
I think they look very, very reasonable. I think that the key thing is we've got a good margin there. We've got a good margin to play with. The margin is sufficient that we can see the market, decline a little bit in terms of the price of the iron ore without affecting us too badly. We could survive a downturn. Many of our peer projects that we used to compare ourselves with have disappeared, frankly. They're not there anymore, a lot of them. But certainly our overall costs for this type of product, this quality of product, are pretty reasonable.
And this prime quality iron ore, where is that mainly mined in the world currently? Is it in...
Well, a lot of it is in Europe. LKAB typically they produce a very similar range of products, very high quality. They pelletize theirs, which is different to us, but we can supply to other pelletizers who want to pelletize. Ukraine has some good high-quality iron ore that they can produce. Ferroexpo is a company there. Brazil has some, but they tend to be hematite and not such high quality. They don't have the content of magnetite that we do. And North America, again, but their processing costs are extremely high, whereas our process is pretty simple and relatively inexpensive.
Okay. And do we have some questions from the audience? Yes?
This premium that has been building for the last couple of years.
Yes.
It wasn't around, say, 5-7 years ago, not in that figure at least. What has changed? And what I'm aiming at, how can we be confident that it will stay a substantial premium?
So I can just repeat that question for the audience on the
Sure.
web. This premium, how can we sure that it will be going forward? It will be still in place.
Yeah, I think.
And why has it occurred when it didn't exist before?
Yeah, I mean, it's been building up for a while, but China's had huge pollution problems, as I think is well known by everyone. And one of the big industries and big polluters is the steel industry. And so one of the few ways that they can improve matters is improve the quality of the iron ore. And that's really what's driven the pricing upwards, because a lot of the ore that's been invested in, a lot of the mining that's been invested in recent years has been quite low quality, particularly from Australia, 56, 57, 58, 60% iron. And that does not help China sort its problem out. So they can't buy high quality iron ore overnight because it doesn't exist. It's not there in any reasonable amount. So it's a slow process, but what it's done is push the iron ore price up. And it's a long process. And the other thing is that the other countries in the region, including the developed economies, are all moving in the same way. They're all looking at these higher qualities. So we see this as a very long-term requirement, and we don't see much supply being either available in the next 5 to 10 years, to be honest, because it takes a long time to develop an iron ore project, as many of you know.
Okay. Do we have any more questions from the audience? I have one here on exploration. Can you elaborate a bit on that? Do you see a big potential for exploration success, or this is more that you will develop what you got?
Well, we will continue to develop what we got. The Blötberget has more than the 12 years mine life we've defined so far, so there is potential to expand that particular mine. But I think in the future, once we get the financing for the company, we would certainly look to have an exploration budget included in the money we raise, so that we can start to look in a lot more detail at Westman and bring that up to get all the necessary permits and definitions to the quality and quantity of iron ore there. But the potential is pretty huge as we see it at the moment.
Yes.
You have 3 phases. The second phase is Westman. It's not Hawksburg.
That's right, yes.
Why is that?
I can just repeat it. You have 3 phases, and the second phase is Vesma and not Hawksburg. So can you please explain?
Yeah, we still have an option to develop at the same time, actually, funding allowing. But yes, the plan is that we see a much more cost-effective move directly into Westman from Blötberget without increasing the infrastructure required near Hawkesbury. So yeah, but this will all be reviewed. That's our current thoughts, to be honest, and we will verify that one way or the other, given the funding.
So I will have another question here.
The numbers you showed, I think it was $500 million US. Was that in your estimated surplus for Blötberget alone, or was it surplus also including forthcoming projects in Westman and Hawkesbury?
The number you showed of $500 million, what was included there of the?
That was purely Blötberget. when we get into the second phases of development, then our capital intensity to build the mines are a lot lower because we'll be able to utilize some of the infrastructure that built around Blötberget. So that's a separate thing that we haven't really evaluated yet. But no, we would expect that the NPV that we get and to increase significantly moving into phases 2 and 3.
Okay. And when you get the definite feasibility study, when do you expect you will get the financing? How does the plan look between that?
Well, the current plan is that we should know early next year what the sort of economic position of the feasibility study is. I would hope anyway, and yeah, we would start discussing as to whether there's a decision to make. Are we going to proceed with the financing or not? So there'll be quite a lot of hard work going on, looking for investors and talking to financing houses and seeing where the market lies. But yeah, so we would see the decision point, I would guess, sometime in late Q1.
Okay. We have time for one final question from the audience. Otherwise, we have to round up. We have run out of time, and I want to thank you very much for a very interesting presentation and project. And yeah, we can give an applause. And Paul will be available at the company corner outside here if you have additional questions you want to discuss. We have a small table outside there.